heck is going on with the price of gold? As we head into the beginning of the fourth quarter of 2025, gold has now surpassed $4,000 an ounce, which is the highest it has been in modern times and basically the highest it has been in recorded history. So what's going on? What's driving this? Well, first off, we need to recognize that there is a reasonable chance that there are certain central banks around the world that are thinking the U.S. might be loosening its grip on the global currency and it might be losing its status as the global reserve currency. I don't think that's going to happen anytime soon, but there is now some pressure with regard to de-globalization and other currencies and other countries around the world competing, that there might now be a need to have a bit of a flight to safety and have gold play its more traditional role. The other thing, of course, is inflation. Gold does well when there's an inflationary environment. And right now, we're in a situation where the U.S. government has basically turned off all the information as a result of the government shutdown. Information with regard to what's going on with the government debt and inflation rates and whatnot is largely being unreported because it's not being collected and distributed because the government agencies that do the collection and distribution have been shut down. What it means is we're now flying blind. We're trying to make decisions with regard to public policy where we don't really know how much inflation we have. And as a result, there's a reason to err on the side of caution and perhaps have greater gold reserves as a buffer against that. There is no question that central banks all around the world have been buying gold, and there's a very strong momentum that would cause people to believe that the price of gold will in fact be going up further as we head into 2026. As I mentioned earlier, the reserves are being added and countries around the world, central banks around the world are adding to their reserves as a hedge against what might be coming down the pike. To give you a sense of just how bad the debt level is in the United States alone, we're now at about $37.8 trillion. And again, that's the best information we have based on the fact that a lot of information is now being shielded from us. We don't really know because of the shutdown. We're flying blind. The numbers could actually be a fair bit worse than that. Or even if they aren't currently worse, they could get worse. And we wouldn't know because the information is not being shared. Governor Powell, the chair of the Federal Reserve, has actually suggested, going back to August at Jackson Hole, that he will allow rates to perhaps come down because he thinks there's enough softness in the job market that it can justify lowering rates. Of course, there's a lot of political pressure coming from President Trump and others in the Republican side of the aisle to lower rates because it reduces the cost of carry. What we're looking at now is a situation where the economy may very well slow, but inflation may begin to creep up. And if that's the case, gold is generally seen as being a good hedge against those sorts of turns of events. So we're in an odd situation, and I cannot help but think that it will continue to not only progress as it has, but it will likely become even more pronounced. The U.S. stock market, led by the Mag 7 and the NASDAQ and technology stocks in general and AI stocks in particular, are still hitting new all-time highs as we enter Q4 of 2025, something that is very inconsistent with the idea of gold doing well. Typically, gold does well when there is a real or perceived insurrection or risk in the market. And what that's telling us is that even though things look good on the outside with regard to what capital markets are doing, we now have a situation where the price of gold is telling us that we should be cautious and we should be worried. Now, I'm not here to say for sure that one or the other will happen, but I, for one, have been subscribing to the notion of gold being a good hedge against both real and perceived insurrection and inflationary pressure and these revaluations of assets for a number of years now. I don't think it's likely to change. I don't know. I don't have a crystal ball, but it would seem to me that the world has very much begun its transformation into a post-international world where we have trading blocks, where there's more inflation, where there's more supply chain disruption, where there's more geopolitical disruption and military threats that is causing the world to realign itself and making gold more valuable. I'm not suggesting you have to have gold in your portfolio, but I would suggest that if you haven't considered putting at least a little bit in, you should at the very least think about it. This has been Weekly Wealth Update, a Make Better Wealth Decisions podcast dedicated to explaining how current events impact your portfolio and the wealth decisions you make. Tune in every Monday for commentary on how the news of the week affects your portfolio and your thinking.